Good morning, sir. My name is Julakiri Safitri. I'm from Accounting D. This is my video record about the video what I watch. What is a general ledger? A general ledger represents the record-keeping system for a company's financial data with debit and credit account records validated by a trial balance. The general ledger provides a record of each financial transaction that takes place during the life on operating company. The general ledger holds account information that is needed to prepare the company's financial statement, and the transaction data is segregated by type into accounts for assets, liabilities, owner's equity, revenues, and expense. How a general ledger works? A general ledger is the foundation of a system used by accountants to store and organize financial data used to create the firm's financial statement. Transactions are posted to individual sub-ledger accounts as defined by the company's chart of account. The transactions are then closed out or summarized to the general ledger, and the accountant generates a trial balance, which serves as a report of its ledger account balance. The trial balance is checked for error and adjusted by posting additional necessary entries, and then the adjusted trial balance is used to general financial statement. How a general ledger functions with double entry accounting. A general ledger is used by business that employ the double entry bookkeeping method, which means that each financial transaction affects at least two sub-ledger accounts and each entry has at least one debit and one credit transaction. Double entry transaction called journal entries are posted in two columns with debit entries on the left and credit entries on the right, and the total of all debits and credit entries must balance. The accounting equation which underlies double entry accounting is as follows. Asset, liability, Assets minus liabilities equals shareholder equity. The balance sheet follows this format and shows information at the detailed account level. For example, the balance sheet shows several assets account, including cash and account receivable in its short-term assets section. The double entry accounting method works based on the accounting equation requirement the transaction posted to the accounts on the left and the equal sign in the formula must equal the total of transactions posted to the account or accounts on the right, even if the equation is presented differently, such as assets equals liability plus stockholders' equity. The balancing rule always applies. What does a general ledger tell you? The transaction details contained in the general ledger are compiled and summarized at various levels to procedure at trial balance, income statement, balance sheet, statement of cash flow, and many other financial reports. This helps accountants, company management, analysts, investors, and other stakeholders assess the company's performance on an ongoing basis. When expense spike in the given period or a company records the transaction that affect its revenues, net income, or their key financial metric, the financial statement data often doesn't tell the whole story. In the case of certain types of accounting errors, it becomes necessary to go back the general ledger and into the detail of each recorded transaction to locate the issues. At times, this can involve reviewing dozens of journals entry, but it is imperative to maintain reliable, error-free, and credible company finance statement. Okay, sir. Thank you.